take this conversation forward with Anirudh Garg, partner and head of research at INVasset PMS. Anirudh, good afternoon. Thank you so much for joining us on the show. Let's just start by talking about the recent performance that's come in, right? We have seen it come off from the lows as well. We've seen a pickup coming in the mid and small cap. Is it now the time to start looking more at it, or would you still be more cautious given a geopolitical situation that is still going on?
Hi, good morning to all of you. So I think mid and small cap is where in the Indian markets you have to be. The reason is very, very simple. These sectors are less prone to the FII selling that is going on in the market, which I don't think going forward will also stop. Yeah, because see, the world is very relative, and one change that we have to accept, we accept it today, we accept it 1 year down the line, that the world as we know it, because of AI, has changed altogether. It is, if we considered coming of the computers as the milestone or a benchmark invention, this is even bigger. So India, in terms of relatively to other global markets, when it comes to the preparation for AI, be it any of the 5 layers, India is the most underprepared market in the world. So obviously, we are expensive. There is, when the FIIs want to sell, we have ready buyers in terms of the SIPs coming in, and they are finding better opportunities elsewhere. Look at different markets like Nasdaq, Dow, Taiwan, Kospi, Japan. They've all rallied somewhere between 40 to 80% in this year, from the February or April, March, April 2025 lows. And we are up just 10-15%. So there the story is very, very clear. So to be safe in India, we have to be very sector specific right now. And mid caps and small caps give us, in broader terms, give us more safety, as FIs generally tend to have lesser exposure to these stocks,
Okay,
as compared to the bigger indices like the Nifty 50 or the Sensex.
All right, Anirudh, that point is taken. Just wanted to narrow down and ask you about these capital market plays, because I do understand that your fund does have exposure within that space. You do have holdings in BSC. But if you look at it, it's been in focus on account of numbers. We've seen good numbers come in from a couple of these capital market plays. We've seen Grow outperform post its numbers as well. How would you approach that space at this point in time? Are you bullish on it? Are you increasing weight on that space? And how would you play that?
So we are bullish on the space, but not increasing, because the maximum that we give to a sector in our strategy or our PMS is around 20%. We had already bought 20%. Now it may have increased because of the recent gains that this sector has seen. But we like to bet on relative changes. By relative change, I mean an advantage or a tailwind which a sector, a company, or a group has, or an industry has, which was not available to it before. So I think 2020, post 2020, there has been a phenomenal change. Something which such a big event like COVID or things like that can only trigger. People who were more into the FD part of the things, more into the banking part of things, they've shifted from the FD culture to the equity culture. And to bring such a to bring such a big shift, it's very, very difficult. And what the mutual fund AMFI and the mutual fund industry has done over a period of time, that mutual fund sahi hai, has now made Indian investor not a FD person anymore, but an equity investor. So now I've seen people, when they're not having returns in the equity markets, which we have not had in the past couple of years in India, still they're okay with investing their money in arbitrage funds, where they can take advantage of almost equal FD return, but with lower taxes. So I think that broader market for Indian investors is now open, and they don't call it the original Satta Bazaar. They used to say that stock market is Satta 5-10 years down ago. Now they're totally comfortable with it. And I think these companies still have a long way to go. I think for the next 5 years, if you have that vision, there will be a higher double-digit growth in these companies going forward as well.
All right, so the FD versus mutual fund debate can go on for a long time, Anirudh, especially after the market fall that we've seen. But that is for some other time, of course, considering the taxation now brings FDs and debt funds at par, barring some of the categories. But let's talk about some of the plays that you are bullish on, Anirudh. Let's talk about that from the mid and small caps. Are valuations across the board very comfortable according to you versus large caps? Or there are still some pockets which are undervalued, and that is something that you would be looking at buying now?
See, with the valuations, valuations are one factor, which are not the primary factor. The primary factor becomes, is there growth or not? So somewhere where there is no growth, valuations will take the second seat. Growth has to take the first seat. So we have to look at companies where growth is there. So if I would talk about valuations relatively, let's say only in India, let's leave the global context. We talk about global context only when we have to talk about the FIIs. But in India, the valuations across the board are not that, they're neither in the very attractive category now. Post 1 month, 1 month ago, they were mouth watering. And today they're neither mouth watering nor they're very expensive. And actually that is the right, I would say the right zone in a bull market where investment should be made. When it comes to the large cap part of things, I believe the large cap is more plagued by growth concerns rather than the valuation concerns. Valuations and Nifty 50 are not that problem, but when you look at the PE ratio of the Nifty, you have to look at the PEG ratio of the Nifty. The growth concerns in various sectors are immense, and I think one has to look at, when you break the Nifty, you have to look at different sectors as well. We cannot look at as large caps, mid caps, and small caps going forward. The sectoral play in India will take a lot of dominance going 1 year, in the next 1 year.
Absolutely. But Anirudh, which are those sectors, if you could help us with some of them, which you like and which you don't like as well?
Okay, so I have been a very, very big critic. I have openly, last time I was in your sister channel, there was a discussion going on about the IT stocks now being at right value. Valuation is all right, guys. The problem is the growth. When a person like me, who has interest in coding and engineering but has no knowledge, is able to code the entire strategy, which used to take me 30 days, depending upon a coder looking at his face, that okay, now he will give me, now he will not. Now you can do it with a click of button, maybe in 3-4 days when you have zero knowledge. So things have changed altogether. So I believe that the IT sector as such is a big no-no. We have zero exposure. We have not exposure in IT sector in the last 2 years. SEBI doesn't allow us hedging, but if I was talking to my team today that if SEBI allows hedging, I wouldn't hedge my entire portfolio by shorting maybe 20% of the IT versus the whole 100% holdings that we are having. Just that is how much we are bearish at IT as a whole. Second, when it comes to the sectors that we like, okay, so what will we have? It's very, very simple to understand. If IT, which is such a major employer in India, when if things go bad for them, which we can see going, what are the sectors which will be affected? I think discretionary consumption is one where there will be problem. Banks and NBFCs exposed to retail lending is one where there is a problem. And the counterparts on the other hand, the banks which are more exposed to corporates, the old economy parts, the PSU banks, the newer banks that are lending are looking all right. Capital markets, as we discussed, the capital market intermediaries look okay to us. We are okay. The only way to play IT in India is either the Motilal Oswal Nasdaq 100 or not a recommendation, guys, to buy or sell, but or the the power pack, because China added as much power, renewable power in the last 1 year, what the total capacity of India is. So India cannot afford losing it. So there will be, I believe, a lot of work to be done in the power sector, especially
Absolutely.
the power. I would say the power equipment manufacturers, especially specialty power equipment manufacturers, is where the growth is. We are seeing. Yeah, so these are the the sectors that I think we are bullish. Moreover, we think that the world is also in a global metal run. That's a very time cyclical, depending upon the inventories part of it. So we are seeing early shoots where we see that a global metal run may also take place this year.
All right, Anirudh, we're going to leave it on that note. That point is taken. So not that bullish in terms of the IT space, and in fact bearish on that entire space, and rightly so today. At least the IT index is under pressure on the back of numbers. We'll take a short break on that note.